I was encouraged to do this without a slide presentation, and now that everyone else has had a deck, I feel a bit silly, but I'll proceed with that one. It's interesting that Phil, speaking just before, of 10 companies presenting, only 2 are in gold. I think that's kind of a sign of the times in the market. I was reminded by a few stakeholders and shareholders that I'd be remiss not to say that this is not at least a 13 or a 14 bagger. Not financial advice, so do your own research, but pretty excited with what we've got here. So just an introduction to Brightstar Resources and myself. So I actually joined the company as Managing Director in January of this year. Prior to that, I had 10 years experience in corporate finance and investment banking and a geologist by background. I joined having known Brightstar and the assets for a number of years. It was previously a client of mine and really saw the opportunity and what this company could be. Contemporaneously with me joining, we actually announced a merger with a company called King West Resources via a scheme of arrangement. What was ostensibly a merger of equals should see post-successful completion of that in the back end of this month. A company that emerges in Western Australia with 1 million ounces of resources and a processing plant on care and maintenance. And at a time when the Aussie dollar gold price is at all-time highs, having a development-ready asset is going to separate us from our peer groups. So just jumping into the companies in the background. So Brightstar was previously known as a company called Stone Resources, and prior to that A1 Minerals. I'll touch on the history shortly because that is really the reason why the opportunity is here. But the projects are centred around the Laverton district in Western Australia. We have 460,000 ounces in JORC resources at the moment. Just under half of those are in measured and indicated status. There is a processing plant on care and maintenance that was last operated in 2013. Brightstar, when it was previously known as Stone Resources, spent a lot of capital on that plant after putting it into care and maintenance and never actually turned it back on. So a really interesting opportunity here to basically take an asset that had a lot of money spent on it and has sat there unloved and untouched for a decade. King West on itself 100% owns the Menzies Gold Project. That's 500,000 ounces, funnily enough, in Menzies. It's got a really long and storied mining history. Essentially, it mined 800,000 ounces over the last 100 years at 19 grams per tonne. So a really high-grade gold field. It's kind of halfway between Kalgoorlie and Leonora. Both of these projects are in that Leonora-Laverton district of Western Australia, so it's really hot at the moment for an M&A perspective. I mean, just look what's happening with Genesis and Gwalia and Silver Lake and Dacian. There's obviously a lot going on in that district as everyone's trying to tie up this to consolidate that belt. So for us, being a part of that and a material part of it, given our resource base and where we think we can take it, is kind of exciting. Just touching on the corporate side of things. So Brightstar at the moment has got a $12 million market cap. Pro forma post-merger with King West, it's about a $22 million market cap. Based on last quarter, he's had about 2.5 in cash, so a circa $20 million enterprise value. So for 1 million ounces, all the mining leases in Western Australia with the processing plant on care and maintenance for an EV of $20 million, I think that's pretty good value when we look at our peer groups in terms of the explorer and developers in Western Australia, all trading on circa $50 to $60 an ounce versus us at 20. So I think we're coming into this from a really good position, and it's just about trying to maximise that value for shareholders by doing our jobs. Just touching on the background of Brightstar, so as I mentioned, it was previously known as A1 Minerals and Stone Resources. It built this operating mine in 2010, operated it until 2013 when it put it on care and maintenance. The company got into a bit of strife operationally, racked up about $60 million of debt with what became then its largest shareholder, a Chinese group called Stone Resources. Changed its name then to Stone Resources down here, and essentially sat between 2013 to about 3 years ago with doing almost nothing. So it had 500,000 ounces in a plant there in Western Australia and essentially did no work whatsoever. The company sold a non-core asset 3 years ago to Regis Resources for about $10 million cash and shares. They used those proceeds to clear all the debt from the business and actually cancel half the shares on issue owned by this offshore group, which I've never actually seen before, but half the capital structure was just deleted. So 3 years ago, it was a brand new template and landscape for this company to be built on, raised a bit of money and started the exploration, and I came in recently to help fast track that, really at a time when the opportunity is to build something quite material and meaningful, at a time when the Aussie dollar gold price is all-time highs, and it is difficult to finance these operations and finance these companies. When I look at the recent builds and the recent gold developers in Western Australia, I mean, we could all probably name one or two that probably haven't gone too well at the moment, and I think moving forward, raising that equity capital and the actually access to debt as well to build these projects is going to be difficult. So to have a project where the capital cost to get into production is really low, I think is a huge differentiator for us in the market, and I think that's what's going to be really important moving forward. On Menzies itself in King West, so this is a project and asset base I was really familiar with from my time and on the banking side of things. Liked the project and what the guys were trying to do, but I think it probably lost its way a little bit corporately from a project perspective about trying to advance that and trying to monetize it. Unfortunately, it never really had the critical mass to build something, build its own processing infrastructure, but 500,000 ounces sitting in mining leases in Western Australia within a couple hundred metres of the Goldfields Highway, it's an important asset that just wasn't getting any value or reflected in the market. So for us being able to tie in what was two unloved assets and companies for a variety of reasons and trying to give it a new lease on life is, I think, what's going to be the opportunity here. Touching on the resources at Menzies, as I mentioned, it had mined 800,000 ounces previously. It's got a 500,000 ounce resource. So when you look at the 12 odd kilometres of strike we've got there at Menzies, that's a mineral endowment of 1.3 million ounces, and it really hasn't had much love below 100 metres, which is ironic because it was mined down to 600 metres 100 years ago. So when you look at the drill density around some of these areas, it's really sparse. So that's the opportunity here, is to come out and really try and add that value with the drill bit. The recent exploration from King West have come out. They've shown really good grades. Look, it is a high-grade goldfield. The head grade of the resource is 1.3 grams per tonne, not reflective of a system that's mined at 19 grams. So the opportunity is to go into Menzies with looking through the lens of, let's go for margin, let's not go for ounces. Let's go for stuff that is going to truck to your own infrastructure. Let's go looking for stuff that's actually going to make money. Because ultimately, when you're trying to build a gold project, especially at the moment, there's too many of them that probably aren't working because they've been built on assumptions that weren't quite valid. When I think about the Brightstar Laverton tenure, as I mentioned, this project had sat there for 10 years without a drill hole. So there's significant exploration upside. One of the projects there, Cork Tree Wells, got 250,000 ounces over a 3 kilometre strike. We did a SAM survey from about 18 months ago that showed that those structures run for another 3 kilometres and don't have a drill hole into it. So for me, joining this business, there's a lot of value to add, both with the exploration but also quickly moving through the feasibility studies. And again, it comes down to people. So when I came into this business, King West hired a gentleman called Dean Valve. He's as Chief Operating Officer. He's a mining engineer and a geologist. Was previously mining manager at Calidus and has built a number of gold mines with Minjar and things. So he's coming into it from a skill set of running feasibility studies, building mines, operating mines. And for me, looking at what this business needs to be successful, it's got the asset base. It was unloved by the market. It was operationally, probably both companies weren't well run. No equity capital market exposure. No one really knew what the companies were, and that's really the opportunity here. It's not trying to create something. It's not trying to find something. The asset's already there. We've got 1 million ounces. It's about growing that and about taking it through that feasibility study process. When I look at the district, there are a lot of other opportunities as well from an M&A perspective, so it's certainly the inorganic growth is going to be a key strategy for ours. If we can buy something for cheaper than we can discover it, then absolutely we'll do that, because I think the death knell for a lot of these companies is raising money, drilling holes, and everyone loses interest. You kind of go from broker group to broker group, and rarely do you see these companies actually advance towards production. So why I'm here is actually to build a gold company that's actually going to be in production in the next couple of years, because we've got the asset base for it, we've got the processing infrastructure, we've got things that are tangible, such as airstrips, haul roads, tailings dam, we've got an accommodation camp. These are things that aren't factored at all into an enterprise value of $20 million, considering the resources we've got. So moving forward, the merger, the vote is actually this week, so that'll complete the vote will be on Friday. Completion for the merger is on schedule for the end of May. That'll see us getting on the ground shortly thereafter on both projects, commencing drilling on both of them in June, July. We've got a scoping study underway that we're trying to get out by mid-year, so that'll be an overarching assessment into the operations for both companies, and we'll be able to take that swiftly into a PFS looking to get into restart for next year. So I'll leave it there. Thank you.